All right, let's get right into it. Today we're tackling a really strange paradox at the very heart of the AI boom. The people building this future, the insiders, are also the ones warning us that the whole thing might just be a house of cards. So what's going on?
I mean, it doesn't get much more direct than this. This is Sam Altman we're talking about, the CEO of OpenAI. You know, the company that really kicked off this whole frenzy with ChatGPT. He's on the record saying the AI world looks like a bubble where the valuations are just completely disconnected from what these companies are really worth.
And that's the billion-dollar question, isn't it? It just seems totally backwards. Why would the CEO of the company that lit the match publicly pour water on the very fire that's fueling this whole thing? Is this just a moment of brutal honesty? Or is it some kind of 4D chess move to manage these crazy expectations? It's a paradox that tells you something really significant is happening just beneath the surface.
And it's not just Altman. Over at Meta, Mark Zuckerberg has basically said the same thing. He admits an AI bubble is quite possible, and he even compares it to other huge infrastructure buildouts in history, like railroads or the early internet, where a ton of hype and overinvestment led to a crash. But here's the thing. For him, the risk of not investing, of missing out on what could be the next massive technological leap, is just too high. It's a perfect example of how even the most rational leaders get swept up in the psychology of a boom.
So, okay, if the insiders themselves are getting worried, what exactly are they seeing? Let's break down the classic warning signs of a tech bubble and see how they stack up.
Well, at the core of any bubble, it's all about psychology. And right now, what we're seeing is what some call crazy investor sentiment. It's this powerful fear of missing out, FOMO, that's just driving these massive investments. We are literally seeing billions of dollars pour into companies that haven't even launched a single product yet.
Okay, get this. There's one startup founded by a former OpenAI executive that managed to raise a staggering $2 billion. $2 billion. And that was before they even had a product to show anyone. The valuation is based almost entirely on the founder's resume and the promise of what might come later.
Or how about this one? Another startup from an OpenAI co-founder has reportedly raised money at a massive $32 billion valuation. Again, this is a company with zero revenue, and it's being valued based on the promise that it might one day achieve artificial general intelligence, or AGI, a hypothetical AI with human-like smarts. That is a huge, huge bet on a future that frankly doesn't exist yet.
And look, this isn't just a gut feeling. We've got academic research that backs all this up. I know this chart looks a little intense, but here's the key takeaway. It basically measures how well a company's stock price lines up with its actual financial performance, its profits. Just look at that orange line for the tech companies. See how it just takes a nosedive after 2022? That's the data right there, showing that for a ton of tech companies, valuations have become completely untethered from their real-world financial health.
And then there's this number, which pretty much sent a shockwave through Wall Street. A report from researchers at MIT found that a staggering 95% of corporate generative AI pilot programs are generating zero financial return. Zero. So despite all the billions being spent, most companies just aren't seeing it translate to the bottom line.
So when you put all of these pieces together, the parallels to the dot-com bubble are, well, they're pretty hard to ignore. You've got all the same key ingredients, a game-changing new technology, investors all piling in because of FOMO, a media narrative that's screaming about a revolution, and valuations based on future potential. Back then it was website clicks, today it's the race to AGI, instead of actual current profits.
But hold on, is it really that simple? Is this just history repeating itself beat for beat? Let's flip the script and look at the other side of the argument. The case for why this boom might actually be built on much more solid ground.
Because, you see, if you look past all the hype around the speculative startups and you focus on the giants who are actually building the AI infrastructure, well, their fundamentals tell a very, very different story. So, check this out. This analysis from JP Morgan shows that the level of capital expenditure, that's the real money companies are spending on physical stuff like data centers and chips, is actually pretty measured this time around. At the peak of the dot-com bubble, telecom spending hit almost 2.7% of the entire US GDP. Today's AI boom? It's just over 1%. The investment is huge, don't get me wrong, but it's not on the same wild scale relative to the economy.
And this side-by-side comparison of company valuations is really telling. Back in the dot-com era, you had these telecom companies with valuations that were dozens, sometimes even hundreds of times their earnings. It was insane. Today's big AI players, yeah, they're expensive, but they're nowhere near those levels. And in a lot of cases, their valuations are actually coming down to earth as their massive profits start to catch up with all the hype.
So the whole case against a bubble really boils down to three key points. First, the major tech companies building AI have incredibly strong balance sheets. We're talking tons of cash and very little debt. Second, unlike some tech fads of the past, the underlying AI models are getting measurably better and more powerful all the time. And third, with only about 9% of US firms actually using AI right now, there's a massive, untapped market still out there. The runway for growth is huge.
Okay, so we have two completely opposite arguments here. One side is screaming bubble, the other is saying the foundations are solid. So how do we make sense of this? Well, the answer lies in making one really crucial distinction.
This comment from a user on Reddit just hits the nail on the head. You can absolutely believe that the technology itself is revolutionary without also believing that every single AI company out there is worth its sky-high valuation. It's not a contradiction.
Let's break that down a bit. On one hand, the technology is absolutely real. AI and large language models are completely transformative, and they are not going away. The potential for future productivity gains is enormous. But on the other hand, a lot of these company valuations are based purely on hype and promises, not on proven sustainable business models. It's totally possible to believe both of these things at the exact same time.
And this leads us to our final and maybe most counterintuitive idea of all. What if the bubble bursting isn't actually the worst-case scenario? What if it's actually a good thing?
It's a really provocative thought, right? But some people argue that a crash would actually be beneficial for the long-term health and progress of AI. It sounds kind of crazy at first, but the logic behind it is surprisingly sound.
Think of it as a kind of purification process. First, the companies that are built only on hype would just vanish. Second, all the speculative money that's just chasing a fast buck would dry up. But third, and this is the crucial part, the valuable infrastructure, all the data centers, the chips, the open source models, all of that would still be there. And finally, the industry's focus could shift from this wild goose chase for AGI to just building practical applications that solve real problems. We've seen this exact movie play out before, after the dot-com crash, and that's what ultimately cleared the way for giants like Google and Amazon to build real, lasting businesses.
So ultimately, maybe the warnings we're hearing from insiders like Sam Altman aren't just about risk. Maybe they're also about what comes next. The hype is going to fade. It always does. The real question isn't if that will happen, but when it does, what will be left? And what will the next generation of builders create from the incredibly powerful tools and infrastructure that this boom leaves behind? That, right there, is the real story to watch.